I'm gonna have to start trading the spoons, dang it. I gotta trade a 4 lot, closing range buy. Oh, so architect, it's super simple, right? Market on open is going to be institutional orders that need cash settle, which means they need to be decollateralized, right? So what that so like if I'm gonna buy securities and my collateral is a bunch of 30-year notes, right? A bunch of 5-year notes. Buy that out, right? And I need to do that swap. There's 2 points in that market that which can swap. When London Stock Exchange closes, so going into 11, e.g., lunch, which is often why you get a rebalance macro, or on the backside of the day. The reason why you do backside of the day is if you're an American company, so Vanguard, Fidelity, fill in the blank, sham. If you've ever had to withdraw from a pension, a 401k, if your 401k needs to rebalance, any of that, those markets are hitting at the end of the day because it's whatever is closest to be perceived is fair market value for the price delivery of that day. That's their justification, right? So they call it an end of day trade, late day trade. It's all the same things, and that's where a lot of those imbalances are coming from. So if you need to move a 401k and you need to liquidate out of like a target date fund, that's what's happening at the end of the day. So if Moo is saying, "Hey, we need to swap these out pre-lunch," and because of T1, right? If you need cash in hand to move a 401k around, that's got to happen at the backside of the market. If it's a big enough order, they'll split it between the two. It's rare, but you can track it. So if this is what sandwiches my day, right? That means the most amount of, and this is why your volume, by the way, your volume spikes in New York, is because you actually have a bunch of people bidding and offering the market up or lower, right? So if you go look up the life cycle of a trade, you'll see that the buy side of market making and the sell side of market making is swapping things around here, right? You're either getting your order is going to get broken, e.g., they're not going to get filled, you're going to get margin called, all sorts of things, all the way through here. Or people have taken their money off of the table to let this go because they want to figure out where we establish fair market value. But this was booked and this was leaked out. And the reason why I know that is because when you listen to those old boys from the pits, the moment we opened for news, they all called long. They heard the value, and it was before they could finish the value of where Spruce was at. It was buy, 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 right? So the street knew, right? And this was already pre-booked up. You can see that from opening ranges and closing ranges. That's neither here nor there. No, it's not IPTA, right? You have a whole just ass ton of algos slamming the market at all given times, right? So I want to be a participant in the market in this range. One, because I'm lazy. Two, because I'm impatient. And three, if I need to trade big dog size, I need a lot of people to play ball. Big dog size for me is quite small, right? Like old Paxi Poo, I think was running like a 40 to 60 lot somewhere around in here, or at least one of the guys or gals in his group was, and that's considered a full size. A full size for me on a funded account is like 8 lot. So So then when I see us open and see strength and us swing down into a prior opening range, my first inclination is flap it, long it. I don't care. I literally don't care. Like when Kish talks about a no stop loss protocol, the moment we're in that opening range, which is probably hard to see because there's a closing range here, the moment we tag into that thing, I'm market buying. Is I will break trade of eight getting into that move. And then when we leave, right? Scratch, paid for, kill it. You start curling at 10-15, you ain't gonna sit in that. That ain't gonna be a good day for you. Plus you got a flat ass down here at 10, well it was for NAS, but it wasn't for spoos. So we spooled down, we paired up closing range, EQ, exhibit A, and then you let it go. You're going up. Then go run out them highs and call it a day. But you made 6 Gs, so like who cares, Whatever. These two ranges determine everything for me. I'm an intraday trader. I don't care what the weekly PO3 is. I don't care what the SMT on the schmoogly boogly bear is. Who cares? Yeah. So like Nasdaq I played around with quite a bit today. Partially because I was bored, partially because I was tired. So like when you're pulling a breakout here, right, and your pay line is 10, right? You're getting caught on the way out, couple ticks in the rears. When you hit pay line, your stop is scratch plus one. So top of it's 21,260, which means your stop is 21,261. By the time spread and commissions get you, it's a break-even trade. Same thing on the backside. Because I don't fade the opening range. I'm not an idiot. 10 points, she runs. She goes down. When at 938, 940, 945, 950, if we're not blowing through a prior OR, I'm fading today's OR. I'm using a prior OR as price support. If I'm wrong, I'll just catch it on the backside. Who cares? The average spread on an OR is like 19 points. So if I'm wrong, who cares? That's a low cost. It's a low cost trade. So the fact that we immediately snapped back out of this, I kill the trade and I get caught on the exit velocity of this OR. So now I'm long, then I go paid, and then you let it go. Right? Assuming I'm not in the long already from the CPI low. Right. I don't know how these guys record their screens. It's so stupid. Like just trade. I'm so worried about recording a trade, making sure, oh, the angle's right. I got the right music. It's like, good lord. Would you recommend joining Path, even if I got classes? Danny, I want you to pull up, if you have access to level 2 data, and I want you to pull up a DOM for NASDAQ, SPOOs, gold, and crude. And then I want you to close the chart. And at that point, I want you to look at all that shit flickering around, right? And go, is this how I want to trade? You get used to it, to be fair. You absolutely get used to it. But like candlesticks are going to make you poor. Let me put it that way. Oh geez. The beads are back out. The beads are back out. It's an interesting way to view the DOM. The other one that I found, Ed, was this. Let me go find it. It's the Egyptian guy. Damn it, I already forgot his name. I tweeted at him this morning. Poor Rena. I kicked her out. I said, "Go rest. Your heart needs rest." If I had a Windows machine, and no, don't be like, "Oh, you could just run a VPS and then schmoogly boogly bash it." Don't be dumb. The one that I liked was this guy. It's the same as Leo the Lion, by the way. I don't know these guys' strats. They're really nice guys though. Leo's a really fun guy. Um, but apparently on Sierra chart, right, you can load up a bar chart, the DOM, the volume, like that. If I could figure out how to do that well on Tradeovate, I would do it. Right? Yeah, I love bar charts. Bar charts tickle my pantalones. Somebody else said something with in all caps. The big question, Cold Brew never answers me. It depends, Frank. Do you want to be a breakout trader and go ding a ling a ling on the um, Dom? And yeah, that's actually that's a great video. I sent this video to somebody else. Like, yeah, go to like 11 minutes. 11 minutes, 40 seconds. It didn't even get filled. But, if you watch that video, right, you hit your full TP on NAS. It's still going up. I hate take profits so much. If you want to go dingle ding
Hi
around
everyone,
on a
this
DOM
is Pete
and
from the Pax
learn
Group.
all of that,
I just wanted to do a
I think
quick
it's incredible.
video on DOM
We
execution,
walk
the
you through it.
mechanics, and
We
how
hold
we
your hand.
typically trade
We
the
tickle
opening
your
range.
toes.
We've had a
He's
lot
a
of
great man to
questions
study under. I
through
it's amazing.
Twitter, email, and
I am
all
someone
social media about how we
that I
execute,
don't
and
know
it's
if I can unlearn some of the things that I have seen in the market. Deliveries that Kish has taught, doji measurement from Raphael, first presentation OB, like there are things that I don't know if I can give up. And I told him that. And he was like, "Great. You can come hang out in here, right? And dingle around." But he's like, "Don't post any charts. Don't post any charts." And I was like, "All right, cool, man. That's kind of aggressive, but okay, right?" But the nice thing of it was he was like, he recognized that I wasn't going to trade on the DOM. I got the attention span of a squirrel, man. Mix that with cancer and like and cancer treatment, my brain's cooked. I'm not looking at that train track going up and down, but I can tell you that when we have an opening range with a down close candle prior to it, we're going up, regardless of what he says, right? Similar to like, because I was listening into the live, and this isn't me saying that I'm a better trader or anything like that. Like, my God, the guy's an incredible trader, far more profitable than I'll ever be. But like, he sold NAS, and in my mind, I was like, you're just going back down to a prior OR before you go back up. But if you don't have a chart that has that stuff plotted out, right? That's a tough bid, man. That's a tough bid. You'll make a silly mistake doing something like that. or shortened spoos. I think he shorted spoos and then turned around and ran the other way. My psychology, and I know this about myself, I get real aggressive real quick. So that means if I'm taking bad trades, I'm going to tilt real quick. What candles do and what bar charts do is they give me a bit of a thing to step back and go, okay, I know if I measure this point to this point, I'm going to have a framework to cut into a trade. I know I've traded underneath Alex over at Dexter's, I don't know, years. I think like 2022. I love that Mexican, right? So I couldn't give it. So there are some things I couldn't give up. I like to say I keep things very, very simple. Like, mm, this day, my crew didn't trade a whole lot. We took the late day trade. Single bar, swing low, 50% of the up close candle proceeding, long it. You're going from closing range to closing range. I know it will. I know that it will. Why? Because you prior Judas going into 3 p.m., which means you take the high that makes the low. This swing will give you a directionality and expectations for a late day trade. So a late day trade is market on close, right? Market on close is a bunch of imbalances hitting the market. If you watch Financial Juice, he's typically the fastest one to get him out. I don't pay for the pipeline. It's expensive. I'm cheap. But if you go, let me actually just go find the imbalances. You guys are lazy. I'm sure there's a better way to get it, but Financial Juice mock. Here's a good example. So these come out, right? Which means there's 115 million orders to the buy side, 210 million to the sell side. And what that's telling you is people are depositioning, right, out of the Mag Sev, and they're going back into the S&P 500 because it's more evenly weighted across blue chips, a bunch of other things. Which tells you that you're most likely going to see a relatively weak NAS compared to SPOOs, which means SPOOs will be in the lead. This is what explains like your six sister concept from Michael, right? Is when you start to see these numbers turn into 1 billion, 5 billion, 10 billion, then all of a sudden your market, right, is being depositioned in a very specific way, right? Just like I think the market on closed imbalances on everybody yesterday was just all buy side. Everybody's like, F it, buy it. So for me, if you actually, I don't know, what's this? This doesn't give me imbalances, does it? It does give you prior volume though. Advanced volume, issues traded. It gives you trend. Actually, this is a good link. This is a really good link. Block trades, royals. Oh, interesting. It doesn't have the fades on it because it doesn't have dark pools. Okay. So the late day trade, right, is going to be one of two things. It's either continuation or Judas. Because you're all a bunch of ICT traders, so you don't actually know why any of that happens. So you accumulate, right? And you Judas, right, going into 950. So a bunch of orders are getting booked up here, right? You're getting recollateralized. You put money up. The bank is making sure you're good for it. All sorts of things are happening right here. People are buying the market, right? Note that they're buying the market after tagging the opening range high. That's a different lesson. So then you begin spooling, and then here's your end of day Judas. Bing bop, kiddly pow. It does not need to look like any other Judas of the day. Oh geez. You are just looking for a swing high and a swing low. What am I doing? I'm so tired. Bam! And this would be your roadmap for that delivery, right? Boom, boom, bop, bop, kiddly paddly cow. And then your expectations, right, are then governed by the closing ranges. Because your original protraction actually happened down here. Of course, I draw it wrong after I said don't reverse it. Oh no, it's right here. Oh, that was a tricky one. That one you would miss. But you expand, offset distribution, come back, order pair. You're setting a new delivery here, right? And that new delivery is here. Zippity-doo-dah-day. So then opening range, closing range, closing range, closing range, opening range. So bing bop, diddly pow. The dinosaur dance is starting now. Expectations for the day. And then opening range. Bop. So we're an offset distro, which then tells me that the larger protraction for this delivery during regular trading hours, again, there's not New York trading, it's just regular versus electronic, would be this. So I would look for a high to be formed here. So then you go to the 12-hour to find your 12-hour tickle and what exists at your 12-hour tickle. Holy shnikes. Holy shnikes, Batman. Yeah. So opening range is your protractable. So like think of AMD, right? If you think of AMD, your larger move would state that this is your larger expectation for the move, right? Because Spoos and Dow already rolled out 60-day lows. So if this is my larger move and it's Wednesday, then I need to lower my expectations. So Monday rolls up into the OB of Friday, sells off. Tuesday, which would mean low of the week. A lot of ICT traders got smoked trying to short this, right? Being like, we're going to go run out previous day low and London lows, and there's liquidity and relative equal lows. Everybody else already set low of the week earlier. We already playing different games. This is a function of order pairing, which then tells me if this paired to this and this pulled this forward, my protraction from an opening range distribution standpoint would be from Friday to Tuesday. Right? We have, what, another hour? The nice part is, if they do want to pop it off like a drunk, this is not unexpectable. Right? Well, let me go actually look. Is anybody reporting today? Earnings? I didn't even look. I'm so tired. Earnings. Oh, God. Earnings. NASDAQ. When do people start cranking the earnings? Because JP Morgan Chase was pre-market. Nobody matters today. Tomorrow, Taiwan, and then nobody matters. Friday, Brew matters, and then nobody matters. You actually might roll back down. You actually might be popping into high of day because they need to save some of this juice. They got to save some of the rally for next week because next week I need earnings to go just absolutely nutters. But yeah, for me, architect, the safer bet is opening, closing price, right? So opening, closing price. Well, we settled here. So from my understanding of order pairing, this would be the high of day for me, right? Because that means hands have changed their money. But your 12-hour tickle determines a good majority of that. You're already over 50%. You're at fair market sell, so you may stop. But ideally, your tickle finishes up here. This tickle was the ticket for today. I love a good tickle. I love a good tickle. It gives you a little tickle tickle. Yeah, man. When I started like really cutting teeth on service now. But it's one of those things, right, where I'm like, when I started really digging into it, because I started pairing it up. Oh, architect, the other thing. Shit, I forgot to show you this too. The relational balance between opening range, closing range, and regular trading hours, right? Because I've been trying to help a guy in my group. Like, he just kind of sucks ass at trading, right? And I want to, like, I really am compelled to be like, stop sucking, right? Like, just stop sucking. Hold on, I gotta blow my nose. You click a link and you hit sign up. So, architect, the other thing I found out the other day, because I was like, shit, like, I gotta figure out how to, like, really change where this guy's going, or he's just gonna burn his bank account down paying for membership fees, right? And so I was like, all right, how do you fix somebody up like that, right? And so, one of my big PD arrays that I love is a breaker, right? I trade them differently than most, ICT nerds do, but whatever. T nerds. So for me, I look for market continuation or Judas reversal, right? So market opens, and you can see what happens when this isn't true. By the way, market opens, shits the bed, right? We should probably go do this on the continuous. We're gonna run out of data. We got a down close candle that supported price up, right? That looks like a lunge reversal. Yeah, lunge reversal profile, right? Which tells me we're either gonna run those lows or we're gonna bounce off them lows. The reason why you don't run lows is because those lows don't have any liquidity. They were used for order pairing, right? So, oh yeah, We were looking at a different one. We were looking over here because there was BPR somewhere over here. It's right here. So we open up volume imbalance, OB. It's so thick. Such a thick boy. Down close candle, supported price up. Draw that shit over. You sell it. The market opens, gap down. You're in line with order flow. You sell it. I don't care what the opening range is, closing range is. You sell it. Your order flow is bearish. That's a bag. You pair up an OB, volume imbalance. You curl, order pair. You do not change in CSD. What are you gonna do? You're gonna gap down. Sure as hell. What happened? Gap down. Up close candle. Supports price down. We gap down underneath the PD arrays, which means we've swept. So you're doing a new order pairing series. Rejection block. OB at the low. Bingity, 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 bop. What do we do? Order pair on the OB. Where are we going? Down. Death. Sell it. Where do you need to order pair into? This guy right here. Right? And you want to order pair in this wick. So we'll just gotta borrow that guy. It's pretty sloppy, but that's fine. Order pair in the wick. Rally up. What do? We sell. But then we fail to break the OR. We rally above two closing ranges, and you close above 50%. Come on, TradingView. Of your balanced price range. And where do parabolic moves happen? Above equilibrium. You gap up, opening range, tag it, repair, drag it on over. This down close candle is now supporting price up. Rally it up. What are you going to go do? You're going to go put a wick on this ugly bastard. Sell down back into the OR. You're fine. You're long from here. Who cares? And then you just go bibbity, bibbity, boppity, boop. And then your next bit of impediment is going to be the gap of here. Draw the line, TradingView. Thank you. I mean, that's also where we can maybe possibly set a high of day. Right here. Because from here, go of it, right? This balance. This is offered. This does not need price through it. So if you're going to go through it, you got to go through it with the haze of 1,000 angry toddlers. But if not, 60-day lows are still open. So late day trade will determine my next expectation for the remainder of the week. Because at the middle of the week, ding dong. Does not look at news. No. The hell cares? Is the market printing down closed candles that are supporting price up? Some poor guy in my group tried to do this shit today, and I just absolutely roasted him. He was like, he tried to short this because he was like, there's a 15-minute order block. Closing range, opening range. Let's lookily boogly there. I was like, what are you doing? The market just rallied 400 points, and you're over here trying to call a top on a 15-minute up close candle? Hush, pup. Little pup, little pipsqueak, little bibbity bobbity boop. Or just close the trade. But you can see there's a point where I stop caring about that opening range and I start trading the OBs around it. So that's why I was telling you it's a lot more. I start to treat it more like a new day opening gap or a contract rollover or like the yearly opening range because we're still in the yearly opening range right now. At least I think we are. I'll have to look. It's the easiest to see it. Yeah. If I'm not trading news, because there's a few prints that I'll trade, right? I'll trade Powell. I'll trade CPI. I'll trade PPI. And there's one more. PCE. I'll totally dick around on PCE. But if I'm not trading news, I I just want to wait for the OR. Take my 150 points, put 4-6 lot on it, call it a day. I think that's from yesterday. That's awkward. No. Think use your brain for a second. If there is an opening range for regular trading hours, that means the strike of a new year will have an opening range, no? That might be one of those things where I think you might have to go teach that to him or get that from him. I gotta be careful with that one because there's other stuff that we've studied and we've found that is how do I say this? It would be counter to his expectations. There we gap fill. Uh, yeah, I probably can't say that stuff out loud. But Pat's typically architect. He's got like an old man book of Excel sheets and notes, and like you can hear him. You can hear him wrestling. He's not sitting there with like a chart, right? Like we have a chart. He might have a daily or like real rates versus like the current like what you would look at it like the US 10Y versus EB or junk bonds or something like that. Like it's a bit more of like old school style. And he definitely doesn't do it on TradingView. But he's real you you play on the Dom. Real traders play on the Dom. Yeah, yeah, yeah. Like some of these old boys, right, who have like tear sheets with like the 21 EMA on a 5 minute bouncing along trend, the 2 and the 5 year inversion, like stuff like that. Like they were banging on about this the other day. I'm like, um, what was it? Oh, they were like, oh, big tech is gonna crash like Staples because of how how big the capitalize or the capitalization is. Sometimes I see these young guys running prop firms, and I'm like, oh, geez. This is a distraction. Okay, John. John, the VIP. Yeah, the yearly OR and its relationship to like other things. That might be uh that might be a Paxi thing. Uh BX, I trade Bitcoin on T's model mostly. I'm an incredibly aggressive crypto trader. There was a poor guy in my group who was like, "I'm gonna short Bitcoin," and I was like, "Shut up, just shut up." Again, don't short a market that's just going parabolic. You're gonna get kicked in the nuts. I don't care what your analysis says. You're gonna get kicked in your tiny little testicles. So if you look at Bitcoin on the 12, because I trade Bitcoin on the 12 hour. If you're trading Bitcoin on a 5 minute, you're a moron. Absolute moron. So for me, I'm looking for big down close candle, nuke liquidity, order block, right? Why did I not take the long? Oh, that's right. I wanted the HPFS. I wanted to order pair back into this. Now I remember. So I missed the trade. But it doesn't matter because I got tagged in on the way back up as an exit velocity trade. Boom, 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 boom. Right? If I was to trade crypto, I would only trade order blocks. I think if you trade anything else, and if you trade anything other than the 12-hour chart, you're an absolute moron. Or you're gonna leverage yourself to the you're gonna leverage too far. No. Look, big dog. Volume imbalance, single bar order block. You buy the volume imbalance and your stop is at that low. And then you go away. That's 42 points. If that makes your booty hole pucker, you shouldn't trade crypto. Say you didn't take the exit velocity trade back up into the OR or into the OB. Which low did it take? Right here. What's 50% of that candle? Right there. Same thing here, right? Down close candle, no liquidity taken. So it has to grab body plus inefficiency. Inefficiency was the volume imbalance, right? So you're shopping right there. So if you're shopping right there, you go to 15, down close candle, inside print, you're rotating out. You long the hell out of that candle. Your stop is like 4 points. Who cares? If you lose $1,000 on that trade, you should be overjoyed. That's a good trade. But no, you just dick around on the 12-hour. Don't be an idiot. And then the 12-hour tickle says that wick, right? And then the body inside the inefficiency. You want to be careful through there, right? Because this, right, is not an order block. If someone says this is an order block, you fire them. That person's an idiot. Can't be an order block if you don't take a high, you ding dong. You're pairing. You're pairing. Pairing inefficiency. So you have about 4 hours left on this candle, right? We don't live in CME drama. So you got to get above that top line. You don't get above that top line, who cares? You just took 3,000 points out.
What's up, Bing Bong?
There's sweet pie.
How's your food?
Oh man,
Good or bad?
amazing. It's a Donbury bowl. I don't know what that means, but it's rice, Thai chilies, avocado, steak, ponzu,
Damn.
and
Sounds
yuzu.
fire.
A lot of people put radish on things. Nobody eats radish.
Is that a burrito?
That must be from taco eating individual.
Oh my goodness. It's all love,
Oh look,
BX.
it's the engineer.
Yeah.
Isn't that cute? His little opening range of 30 minutes.
I don't know who's not telling you this, but your microphone that's in front of your face or near your face is definitely not in use because I hear your speaker from your from your
Yeah,
headphones.
these-
I think the input difference is we don't hear you HQ. We love you too much. We want you HQ.
All right, hold on. Let me tickle your pantaloons. Grab my little USB C mic and plug in my money. I hate these Bose headphones.
Nobody even noticed. Yeah, my OCD is quite something. But yeah, Bitcoin about a top blast 100K again. Interesting. Interessante. How's everyone's day today though? Good, bad, medium, stays the same. It's like 88 people in here. I don't speak Spanish, sorry. Solid, great. And if it wasn't, I want to hear like honesty too. Learning, awesome, decent, good. Raphael, shout out you, bro. Brother's killing it. Calling moves left and right.
Boom, boom. There we go. Is that better?
Oh yeah, you're sounding
Boom
much
shakalaka.
crisper now. Oh yeah, oh yeah. It's like night and day difference. You go from like a middle school like headset to like a professional sound studio. Oh goodness. I don't know if you like that one or not, but we'll see. Oh goodness. Me and myself, I gotta just take it easy sometimes.
You gotta take it
Engineer, I
easy.
invited you on stage if you want to just say what's up too.
Where is the
Missed you, brother.
engineer?
I'm here. Bing bong.
Bing bong, epic.
Are you still on, c0lde?
How are
We
you?
miss, we miss you, brother.
I gotta
me
go look
too.
at your Twitter. I gotta go see this. I guarantee.